Good day, traders. This is Richard on Sunday morning at 9 a.m. Pacific talking about performance. Performance is the elusive ingredient of trading that all traders covet and want to be good. It is a difficult task to perform consistently well day in and day out of a year or two or 10 or 20. I can look back over 20 years of my trading experience, which has been very complex, and it has changed and morphed over time repeatedly. I can remember back when I first started, trading mutual funds in the 90s. And then I got a little annoyed that the mutual fund guys had to put your money into some stock or other by law, whether it was going to move right with you or not. And the other thing is they couldn't short. They couldn't play the hedge game with your money. So I stopped my mutual funds. I closed them all and opened a live trading account. I could do that in 1998. But I couldn't have done that in 1995 or 1990 because the World Wide Web had not brought to the fore the trading environment. That only took 2 years from 1996 when the World Wide Web was established until I started trading in September. So September back to whatever month it was in 1996 to 2.5, 3 years before was the only period that any of us in the world, besides stockbrokers and traders that responded to stockbrokers, could trade. We couldn't do that, you and I. The millions of us today that trade every day or every week or every month or every quarter. So I'm showing you a trading record that goes back about a month and contains 295 trades. And I believe that everybody should have some kind of a foundation in trading before they trade with live money, real money. I believe that everyone that starts trading, and if you've started trading and used live money already and lost some, you know what I'm talking about. You may not know everything you need, quote unquote, to know to trade consistently reliable. And this message is for you. If you're listening to this and you're a successful hedge fund trader that's made millions, you're not listening to this. You don't care anything about this. I'm talking to the people, the multi-millions of people around the world who have attempted to trade, and some of the money that they've tried to trade has slipped out through their fingers. And they may have gone broke, or they may have cut their account in half, or they may have cut it down by 2/3, or maybe it's close to 99% gone and they're trading with the nickels that they have left. I don't know. Well, I want to talk to the people who are not super successful, but want to be. I believe that is in your best interest at this juncture. Stop trading with money until you are absolutely confident you know what you need to know to trade successfully, proficiently, professionally, and successfully, and make money 3 out of 5 days a week and make more money than you lost every single week. And if you lose money 2 weeks in a row, stop trading for a month and figure out what you've been doing wrong, and then get to the simulator and get the information you need to trade better. Now, that's a tall tale. That's a tall order. That's asking you to change your way of life. Well, if you want to succeed and you're not doing a very good job of it yet, but you really want to make money at this instead of losing little bits of money every week or two, then you need to listen to this message. I have a way that you can do it. And my way is simple. It's divided into triad, a threesome. You start out trading simulator. You migrate to micros. Micros only been around 2 years. You couldn't trade them in 2018. The first time you could have traded them was in 2019, I think, November. They came along about 2.5 years ago. They're approaching the 3-year mark, coming this November, and it's July now. I only want to earn $500 a day. If I earn $500 a day average over a week, it's $2,500. That's $10,000 a month, or a little over $100,000 a year, assuming a couple of weeks or 3 weeks of vacation. That's trading 3 out of 5 days a week. I don't trade every day, and I don't trade for many, many, many hours. I only trade for a couple. I trade 2 hours a day, maybe sometimes 3 or 4, but never more than 5. And I usually have 2 or 3 breaks in there, because you've got to rest your eyes. You've got to get up and walk around. You've got to get some exercise. You've got to get away from trading so that you trade better when you come back to it. So my trading behavior is simply a couple hours a day. Now, I'm not trying to tell you what to do or how to do it. I'm just trying to give you an opportunity to think about what's the right thing for you. But I believe that you'll be better served if you step back and look at your situation. And if you're doing great, keep on doing what you're doing. If you're making $500 a day or more, you don't need to hear any more of what I have to say. But if you're not averaging $500 a day, which only takes $3,000 or $4,000 trading account, maybe $5,000 trading account, and this is why you can enter into many, many instruments with $500 a day, and a few more instruments require $1,000, and then a few less require $2,000 to get into one contract trades. You only need to be in these trades for 15 minutes to an hour and a half. Maybe if you're trading overnight, you need to be in them a couple of 3 days to get your gains. But during those periods, you're going to have peaks and valleys. You're going to have to suffer through losses. My idea is taking 500 a day before the first retrace takes your money away. So I get in at the extreme low on a buy, and I get out at an extreme high on a buy when it's ready to sell. So I watch this oscillator, this one right here. I'm going to show you the one right here on crude oil, this oscillator right here. This is the oscillator I use. I would have bought here, I would have bought there, and I would have bought over there, and I would have bought over here and here. I would have sold here, 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 and that little red tip right there. And we're looking at about 2 weeks. Let's see, count them out. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. So 2.5 weeks is what I'm looking at. And on this 4-hour chart, I'm seeing several buys and several sells, and they all made a little bit of money if you got them right. So there's plenty of trades in every instrument you watch, and I watch about 6. I've got 8 or 10 up here, but I only watch about 6. Now, let's get back to the discussion of gains and losses and performance. You want your performance to be positive. And I recall months in years past where I lost way too much money. I'm not going to mention the dollars, but I have made more money than I've lost over the past 20 years. And in some years, I had help from other traders. But now I'm successful at doing it myself, and I lead other people to do it. So I consider myself a journeyman trader, not a star trader, not Larry Williams or somebody like that, but a proficient trader. I'm on the team. I'm a member of the ball club. I'm a football player. I might spend lots of time on the bench. That's trading on the simulator. I might be a basketball player, but I spend a lot of time on the bench. I'm not out there in every game throwing the ball around. I'm waiting sometimes to get on the team. So when the coach calls, I go. When I see a setup, it's like the coach calling me into the game. But I'm not one of the star players. I'm a backup player. That's about as good as I can say I am. But I'm on the team. That's where you may want to be. And I'm going to show you how to get there. So let's look at all the things I traded in this picture over this 2-month period, June and July, May and June, I think. And I started down here. Here it is, July 1st. There's 300 trades, 295 trades. And so you take that and divide it by 60 days, and there's not 60 days of trading. There's only, 50, 45 days of trading, something like that. So I'm taking 3 or 4 trades a day. Let's count them here. I got right here, we got July. On July 1st, we got 1, 2, 3, 4, 5 trades. They were all losers. Here on the June the 30th, there's 1, 2, 3, 4, 5, 6, 5. And a couple of really good wins and a really bad loss. That's a bad beat. $1,250. God, Richard, how did you do that? I'm glad it was on a simulator, not live. All right, now let's look at this live. There's a live trade with I made $145. Another one I made $560. I probably got in by accident and got out real quick because I didn't have a stop or a target on, and I sometimes forget to always turn one of those on, and I'd forgotten, so I just closed it and made $5. All right, here's the 29th. 1, 2, 3, 4, 5, 6, 7 on the 29th. So 7 trades, and 3 of them out of 7 were live, and the rest were sims. And the live trades lost $600, made $64, made $140, lost $64, made $145 and $540. So I think that 540 is a sim trade. So I made a little money. Okay, here's some live trades. They were some losers. So there's losers on live and sim, but I made money overall on the live trades. And overall, I made $16,000 during this 2-month period. Some sim, some live. You can see that the sim are 3 times as many as the live by just eyeballing it. Here's some really good live trades, all green on the machine. And here's some really good trades on the simulator, 2,500, 2,700, and 1,300. Here's a bad beat on the sim. Here's a couple of good trades on live, a couple of losses, but I made money overall. So it's a matter of understanding that you have to be a good loser. I remember a mentor that made a presentation to us about being a good loser. Nobody wants to be a loser, but you're going to lose money in this business. So don't get downhearted about it. Just figure out how not to do it, how to avoid losing more than you gain. That's the message. Thank you for listening. Richard Rube, signing off.